Welcome to Market Experience Academy. Welcome to episode 7 of our beginners class. Today we'll be talking on trends, market trends, and the type of trends that we have in the forex markets. Without further ado, let's dive into what we have today. Follow me as I share my screen with you. All right, I believe you can see my screen. All right. So today I said we are going to be looking on what trends and types of market trends we have in the forex market. You know that there's a saying that says that trend is your friend. Trend is your friend. You cannot be trading against the trend. It's like somebody that is driving against the sea tide. You know what will happen to that boat or that ship? It will capsize. Yes, it will capsize. So the trends are like when the big boys are buying and you are selling at the same time. I pity your money. Your money will just go. So if they are buying, it is better for you to do what? To buy alongside. Follow them. Follow the current, the sea current. Just follow the direction which they are going. When they are buying, do not sell. When they are selling, do not buy. All you need to do is to do what? Follow the trend. So we'll be talking about the trend in details. So from our slide, we say, what is a trending market and a ranging market? When you hear the word trending, what is in town? What is in vogue? What is reigning? That is what trending market is all about. Trending market is the direction in which the market has been going in a particular period of time. It could be what? Upward movement, or it could be what? A downward movement. So based on what we have in our slide, it said, what is a trending market and a ranging market? A trending market is a market that is trending in one direction or another, is known as what? A trending market. A market that is trending in one direction or another is known as a trending market. A bull market is trending upward, while a bear market is trending downward. A trending market can be classified as such for either the short term or the mid or the long time. Yes. Trend could be what? For many years, it could be for a short time, for a month, or for some period of time. And sometimes it actually depends on the time frame where you are taking your analysis from. So your trend, you can have 5 minutes trend, you can have 1 hour trend, you can have 4 hours trend, you can have monthly trend, time frame trend, we can have the 4 hours time frame trend. So it all depends on the different perspective of time frame you are actually what? Looking at. That's why you saw where they said that we have what? The long time, the short time, and the mid time trends. So but before I go further, I would like to say what the ranging or consolidation market is. There's a time where the market will make this trend for a long period of time, and it will like to do what? Consolidate, like saying that after you accelerate or run for a long period of time, let's say 1 hour, you do what? stand momentarily in one place to do what? To resuscitate or to get back your strength or your breath. Yes, that's what the market does. When the market has moved over a period of time in a long direction, in an upward direction, or in a downward direction, or in a bullish direction, or in a bearish direction, it will become what? It will get to a point or to a particular price where it will do what? Consolidate. Sometimes it is said that the traders are doing what? Taking their profits away from the market. So when they take partial or some of the profit from the market is going to do what? Fall back a little bit. The market is tend to do what? Retrace back like 50% of its movements. That is what we call consolidation or what? Retracement. So based on what we have on our slide, they say that ranging or consolidative market, this happens after a trendy move by a market. Prices come to a flat period where prices don't move much at all on either side. You can say that the Forex market is taking a rest before it will do what? Continue trending again. Continue trending what? Again. So now I will share my chart to just do a kind of demonstration or an illustration of the two types of trends that we have in the Forex market. All right, for me to demonstrate what the uptrend is all about, I'm sharing my screen on our whiteboard. So if we say that the market is making an uptrend, that simply means that the market started from what? Started what? From a downtrend, making lower low, lower high, lower low, lower high, lower low, lower high, equal low, and what? A higher high. You can see we have taken out what this low has been taken out. You can see. Then what he do was it will do what? A lower low, then what? A lower high. 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 So this is what we call what? Forgive my drawings, but this is what we call what? That the market is doing what? Making what? Is trending. Normally the market was what? In a downtrend, making what? Lower low, lower high, lower low, lower high, lower low, then put what? A lower high, then put what? An equal low. This is what? A reversal pattern in the Forex market. When a market makes what? A double bottom, like a W pattern, a double bottom, then look very well, look closely. The market is about to do what? Change direction. The trend is about to do what? Change direction. This normally occur even in the 1 minute time frame, 5 minutes time frame, monthly time frame, 3 months time frame. There's always what? A pattern, a reversal pattern in the Forex market, irrespective of what the time frame. You will see this W pattern or the inverse head and shoulder, indicating that this market, the previous trend, is about to do what? To change direction. So formerly we were experiencing what? A downtrend. Now the market formed what? A double bottom or equal low to indicate that this downtrend is no longer what? A downtrend. It's now about to do what? To change direction. So as this lower high was taken out by the momentum of the market, a new high was made, indicating that the market has what changed direction. So the market went ahead to do what? A lower low, made what? A lower high. A lower low, made what? A lower high. A lower low, made what? A lower high. Indicating that what? We are in now what? In an uptrend. This is what? An uptrend. This is what we call an uptrend in the Forex market. So, and this what is what? Our downtrend. This is what we call a downtrend in the Forex market. So I believe with this little drawing, you have been able to understand the uptrend and what? The downtrend. But I will still go ahead to do what? To show us the downtrend. So that's it. I will go ahead to show us what the downtrend. All right. Okay, let's take this. Okay, let's say that the market was making what? A higher high. Okay, I think I should use the former ones. More better off than this. Okay, let's say that the market was making what? This is something. Okay. Okay, let's say that the market was making a higher high, a higher low, 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 an equal high, an equal low, or take out this previous low. So this lower high was taken out by this move. Was taken out by what? By this move. You can see that the neckline was what's taken out. So we came back here and did what? Made what? A new low and dive down. So this market has changed what? Direction. Formerly, the market was moving what? A higher high, a higher low, a higher high, a higher low, a higher high, a higher low, a higher high. This is what? An uptrend. Then putting up what? A double top. This is a double top. This is what? A reversal pattern in the Forex market. When the market makes what? An upward move or a trend move to the upside, it will do what? Form this pattern to reverse. So when it forms what? A double top, look closely. That trend that was prevailing is about to do what? To change direction. So this neckline was taken out, which is the market structure, broke and retested to indicate what? That we have entered the phase of what? A new trend. So the market went and started making what? Lower low, lower high, a lower low, a lower high, a lower low, a lower high, indicating what? That this what is what? A downtrend. And this is what? Our uptrend. So this was our uptrend and this was our downtrend. I believe I'm driving my explanation. It's clear. It's clear enough. Just forgive me about my drawing. Drawing with this mouse is not that very easy. So that's just an explanation of what the uptrend. Then the market putting up what? A reversal pattern to do what? To change the trend. This is how the trend changed. So that's that. Now let me explain what a consolidative market or a ranging market. Ranging market first before what? A consolidation. When a market is not making a new high or a new low, we say that that market is in a ranging. It's ranging. Let's say when a market is making what? A high, a low, an equal high, an equal low, an equal high, an equal low, an equal high, an equal low, an equal high. We said that what that market is doing what? Consolidating. Is consolidating. This was known as what? Consolidation in the forex market. This is what we call consolidation in the forex market. The market is not making a new high, neither is it making what? A new low. So it keep on what? Confined, moving in a confined place, waiting to do what? To break out either to the upside or to the downside. It all depends on the prevailing trend that was in a state of rest. So let's assume that you notice this at a trend that has been moving upward for a long period of time. Then there's a tendency that it will do what? Break to the upside to do what? To continue or to resume what? The upward trend. So this is what we know as what? A ranging market, or what? Consolidation. A ranging market, or what? Consolidation. A ranging market, or what? Consolidation. This is that time where the market tend to do what? To rest, to what? Gain some strength before what? Continuing in the prevailing trend direction. That is known as what? A ranging market. I believe it's well understood. So that's it. Then when we say that the market is retracement, when a market is retracing, what we meant is this. Let's assume that a market has been doing what? Putting what? A high, a low, 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 an equal high, an equal low. No, if I see me. Now it wants to do what? Consolidate. Let's say we have not done our Fibonacci. Let's say we take our swing low from here and our swing high. There's a tendency that this market have moved almost like 100%. We do what? Come to the middle, 50% or 61% to do what? To retrace before going on, continuing what is journey to the upside. Let's assume that this is what? 50% movement of this market. Yes, let's say that this was a 50%. It was 50% movement of it. So what the market will do is to do what? Make equal high. And there's a break in market structure. Then the market will do what? Pull back, make break, retest, and do what? Come here and make what? A low, lower high, and what? A lower low. When it gets to this 50%, it does what? It has retraced. Yes, this is what we call retracement. This is a retracement at either 50% or 61.8 of Fibonacci. This is what we call retracement, because when the market does this retracement, there's a tendency that the traders that have been buying has done what? Have come to this point to take what? Their profits, partial of their profit, like 50% of their profit has been taken. Then that will make the price to fall a little bit for them to do what? Buy cheaper again to move the market upward. So as they have taken their profits, making the market to do what? Drop in price so that they will buy at a discounted price again to push the market upward for them to do what? Make more money. So the market will do what? Something like a double bottom and a break in market structure, which is this, and do what? Continue to do what? Move higher. Move higher. So this is what we call what? Retracement. This is what we call retracement in the forex market. So I believe with this illustration, we have been able to understand the two types of market trend we have, or the three types of market trend we have. We have what? The upward trending markets, the downward trending markets, the consolidation or ranging markets, and that's that. Then I still went ahead to explain what retracement or pullback is. Retracement, this is called what? Retracement or pullback in the forex market. That's when traders get in, take their profits to make the price of a particular commodity to fall back at least 50% or 61.8% before they will do what? Buy from a discounted price and do what? Push the market upward to what's the prevailing direction of the market, which they were before. So I believe with this little or concise explanation about the trending markets, I've been able to drive my explanation home. This is a very vital video that you need to watch again and what? Again. So let's go back to our chart. All right. So that I've used a pictorial representation to do what? To represent the trending market and what the ranging market and consolidation for us. So I think we should go to our next slide. What is pullback and retracement? I just explained using what my drawing pen to show you what retracement is all about. So a pullback is the falling back of a price from its peak. This price movement might be seen as a brief reversal of what the prevailing trend higher, signaling a temporary pause in upward momentum, also referred to as what? Retracement. When there's what? An upward movement, the market is making higher high, higher low, higher high, higher low, higher high, higher low. That is an uptrend. Then a point where it will get, traders will tend to do or take some partial profits. They will take like 50% of their profits, and that will lead to what? The market falling back to what? A particular price, maybe 50% of the trend that has moved upward. Then these same traders that have taken their profits will now come to buy from a discounted level of price in the market to push the market to continue in what? In the upward movement. So that's what we call retracement in the forex market. So the next topic before us is called what? Support and resistance. But I would like to make this particular topic our what? Episode 7. I don't want to rush it. I will take my time to explain it because this is what? A strategy on its own. This is a strategy that is very popular in the forex market. So let's end this episode 6 with what? Support and resistance. This will be what the next class we'll be looking into in our what? Episode 7. So let's stop sharing our screen. All right, so we have come to the end of what? The episode 6 of this beginners class. We look forward to talk about the support and resistance in our episode 7. Please don't mix that class. Support and resistance is one of the most popularly used strategy in the forex market. So watch soonest. I will drop my episode 7 next week or this very week that we are in to show you how to trade support and resistance, what support and resistance is all about and how it is being traded in the forex market. So thank you for coming to the end of this segment. I look forward to see you next week. God bless you and have what? A splendid weekend ahead of you.